Peter Lynch is an American investment expert and fund manager. He served as the manager of the Fidelity Magellan Fund from 1977 to 1990 and achieved significant success in stock investments during that period. Lynch's investment philosophy believes that investors can find good stocks that will provide safe and substantial returns through thorough research. Lynch explains his investment philosophy in a way that ordinary people can understand, and provides recommendations to investors. The foundation of Lynch's investment philosophy is focused on closely researching and monitoring companies in their surroundings. Lynch emphasizes that investors should focus on which industries are performing well, rather than which industries are popular. Lynch acknowledges that there are many different approaches to investment, but he defines his own approach as lifestyle investing. This approach allows investors to invest in companies that align with their interests and daily lives. When making investment decisions, Lynch takes into account financial ratios and data, but he also examines the products, services, and business models of companies to form a complete picture before making a decision. Which sectors did Lynch emphasize and what was his investment performance in those sectors? What financial ratios did Lynch use when making investment decisions and how did he interpret these ratios? According to Lynch's growth investment strategy, what factors did he prioritize when selecting high-potential companies? According to Lynch's value investment strategy, what factors did he prioritize when selecting companies with low price-earnings ratios? What were the key points Lynch paid the most attention to during the investment process and how did he implement them? For all this and more, before starting the video, if you're interested in universal economic history, you can subscribe to my channel and turn on notifications to be informed about new videos I upload every day. Enjoy the watch.
Universal economic history.
During his tenure as the manager of the Fidelity Magellan Fund, Peter Lynch made many successful investments. Behind the success of Lynch's investments lies his close monitoring of companies, thorough research, and implementation of long-term investment strategies to capitalize on market opportunities. Here are some of Lynch's most successful investments. Walmart, WMT. Lynch invested in Walmart shares in 1978 and held his investment for 13 years. At the time of his investment, Walmart was far from being a national chain. However, Lynch liked Walmart's business model and the strategies of its management team, so he decided to make a long-term investment. As a result, Lynch achieved significant returns on his investment in Walmart shares. Dunkin' Brands, DNKN. Lynch invested in the shares of Allied Lyons, the owner of Dunkin' Donuts, in the 1990s. Dunkin' Donuts was a growing company due to the increase in coffee and snack sales. Lynch invested in the company based on its growth potential and profitability. As a result, he achieved significant returns on his investment in Dunkin' Brands shares. Ford, F. Lynch invested in Ford, one of the largest names in the automotive industry. He made his investment in the mid-1980s. Lynch had confidence in Ford due to its innovative products, effective marketing strategies, and strong financial structure. As a result, he achieved significant returns on his investment in Ford shares. Home Depot, HD. Lynch invested in the shares of the home improvement retailer Home Depot. Lynch admired the management team's ability in customer service, efficiency, and sales growth. By holding his investment for the long term, Lynch achieved significant returns on his investment. McDonald's, MCD. Lynch benefited from the success of McDonald's by investing in its shares. Lynch invested in McDonald's due to its strong brand awareness, product quality, and effective business strategies. As a result, he achieved significant returns on his investment in McDonald's shares. Peter Lynch is known for his value investment strategy in the investment world. Lynch frequently used this strategy during his tenure as the manager of the Fidelity Magellan Fund. The value investment strategy is based on pricing companies according to their real values. This strategy is built on finding the difference between market price and real value and taking advantage of opportunities. Lynch compared high-growth potential companies with those with cheap valuations when using the value investment strategy. This allowed him to identify the real values of companies and invest in companies with potential for growth, leading to high returns. Lynch's value investment strategy requires investors to closely monitor companies. Investors try to determine the real values of companies by examining their financials, income statements, and cash flows. They also pay attention to the abilities of the company's management team, marketing strategies, and competitive strength. The value investment strategy is a long-term strategy. Lynch emphasized the importance of long-term thinking and the success of investments. By evaluating the potential growth and profitability of companies in the long run, investors can make investment decisions. This way, they can fully assess the potential of companies and achieve high returns. Lynch's growth investment strategy primarily requires investors to identify high-potential companies. To do this, investors consider criteria such as the company's market share, growth rate, products and services, financial position, management, and competitive strength. Lynch identified high-growth potential companies by considering these criteria and invested in them, resulting in significant gains. Lynch also took market trends into account when selecting high-potential companies. By following market trends, particularly in growth-oriented sectors, Lynch made his selections. These sectors include technology, healthcare, energy, telecommunications, among others. The growth investment strategy is a long-term strategy. Investors make investments with a long-term investment strategy by selecting high-potential companies. Lynch emphasized the importance of long-term thinking and the success of investments. Lynch's investment strategy offers many opportunities for investors. However, it requires conducting thorough research and analysis to identify high-potential companies. Investors need to closely monitor industries, competitive environments, market trends, and companies' financial positions to evaluate their future growth potential and make informed investment decisions. Peter Lynch achieved successful investments using the approach of financial ratio analysis. This approach allows evaluating companies' financial performance using their financial data. Lynch's approach has helped him achieve success in efficient markets. Financial ratio analysis is a method used to analyze a company's financial performance. It utilizes financial ratios, which represent the ratios between different financial data of companies. These ratios provide important information about the company's financial health, efficiency, and performance. Lynch selects companies for investment by analyzing their financial data using financial ratio analysis. By analyzing the financial data of companies, Lynch obtains significant information about the company's financial health, profitability, growth potential, and debt burden. Lynch's approach to financial ratio analysis has helped him achieve success in efficient markets. Efficient markets are those in which stock prices are close to their intrinsic values. In these markets, stock prices do not change rapidly, and investors quickly access information. Lynch, in these markets, identifies potential investment opportunities by using financial ratio analysis, making sound investment decisions, and achieving successful investments. To become a Lynch-style investor, it is possible to follow the common traits of successful investors. Successful investors have many shared characteristics, and by following these characteristics, investors can also achieve success. Here are some common traits of successful investors. Patience. Successful investors are patient investors. Instead of making quick decisions, investors who think long-term demonstrate patience when making investment decisions. Research. Successful investors are researchers who conduct thorough research on the companies they invest in. By examining the financials, products, services, markets, and competitive environments of companies, they make informed investment decisions. Discipline. Successful investors are disciplined investors. They adhere to their investment strategies, investing in a planned and organized manner. Risk-taking. Successful investors know how to take risks. By identifying and managing risks in advance, they utilize proper risk management strategies when investing. Innovation. Successful investors are innovative investors. By following new ideas and technologies, they invest in the successful companies of the future. Emotional control. Successful investors have good emotional control. When investing, investors who have emotional control make decisions objectively. Long-term thinking. Successful investors are long-term thinkers. By not getting caught up in short-term fluctuations, they follow long-term trends. Peter Lynch provided many practical tips that we can apply to our investment journey. Here are some of Lynch's advice. Research your investments. Lynch advises conducting research on your investments. By researching the financials, products, services, markets, and competitive environments of companies, you can make informed investment decisions. Select the right companies. Lynch emphasizes the importance of selecting the right companies when investing. By evaluating the growth potential, profitability, and competitive advantage of companies, you can make the right investment decisions. Think long-term. Lynch recommends thinking long-term when investing. By following long-term trends and not getting caught up in short-term fluctuations, you can make informed investment decisions. Use simple investment strategies. Lynch says that investment strategies should be simple. Complex investment strategies can confuse and mislead investors. Diversify across different sectors. Lynch suggests investing in different sectors. By diversifying your portfolio, you can reduce risks. Conduct proper evaluation. Lynch advises evaluating companies thoroughly before investing. By accurately determining the values of companies, you can make informed investment decisions. Control your emotions. Lynch advises not to succumb to emotional reactions when investing. Investors with good emotional control make decisions objectively. Following Lynch's advice can provide practical tips that we can apply to our investment journey. By following these tips, we can become Lynch-style investors and make successful investments. Thank you for watching my video. If you liked it, please hit the like button. If there's a specific video you'd like me to make on economic history, don't forget to mention it in the comments section. I wish everyone a pleasant day.
Universal Economic History.